My guest today is Jakob von Weizsäcker. He is the Chief Economist at the German Ministry of Finance and previously served as member of the European Parliament. Jakob belongs to a new generation of European economists who have helped transform the ministry's mindset and contributed to the proposal of a common European economic response to the COVID crisis. Okay, Jakob, thanks very much for being here. You've been very instrumental in the change of position and in the construction of a response to the pandemic of Europe over the last few months, leading up to the recovery plan in July. How did Germany make this transition from this view in the Eurozone crisis, which many outside of Germany considered to be very centered on austerity, etc., to a view that fiscal policy had a big role to play? Is it just about the different type of crisis? Has there been also an evolution? How would you characterize this change?
In my view, this crisis is different for two reasons. And I will start with the, if you will, more political one. It has an economic element, but I think it's generally understood, and it's true, that this virus came over us, and it's nobody's fault. There's no problem of moral hazard, if you will. It's a natural catastrophe. It's like an earthquake. It's horrible. It's killing people. And so I think against that backdrop, it was much easier to say, well, we're in Europe. We're in this together. We need to stick together, and we need to find a solution based on solidarity and mutual support. And what we're seeing now in the second wave is actually that some countries previously who previously felt that they weren't so badly affected, now all of a sudden they are. So it is not only an ex-post insurance, it's actually ex-ante insurance as well against a catastrophe. So I think that's one major difference between the crisis 10 years ago and this crisis. This is a natural disaster, and it is natural for Europe to go through this together in solidarity. So I think that is one very important difference. And then, of course, as economists, because as economists, unfortunately, we didn't overlap in the European Parliament. Yes. I would have very much enjoyed that. Yeah. Is another difference is we're at the zero lower bound. We have a real macroeconomic problem. And in the last crisis, it was possible for monetary policy to simply lower interest rates and do significant stabilization as a result of that. Today, interest rates are basically at zero or even negative. And while that may not be sort of on most citizens' mind immediately as a difference, I think for any economist, it's an obvious difference. And what it implies, of course, is that fiscal policy, to the extent that the crisis, which is, of course, initially a supply shock, also causes aggregate demand problems, that fiscal policy has to play a more prominent role. So I want to leave it at that, but I think these are two major differences that don't have too much to do with the collective psychology of individual member states. I think this time really is different.
Mm-hmm. We in that sense, I really have to congratulate you for your role in coming up with this big plan in your part from the finance ministry and everybody in the Germany side. I think that it's been a big step forward for Europe. Now, the question that was posed in Parliament that many of us were thinking about is this really could this be a Hamiltonian moment for Europe? Is this plan something that is really, like your first part of your answer suggested, very much a specific response to a specific situation? We shouldn't see it as the start of something, or else can we envision that, okay, Europe has shown that there is such a thing as a coordinated, as a joint fiscal response, borrowing together to invest together. Is this a first step of something, or is this the last step of something? What do you think?
It's a very good question, and I think it gives me the opportunity. While of course I'm flattered that you think I might have played an important role in this. Of course, I'm a humble bureaucrat, and the real decisions, of course, they're made at the political level. And the reason why I can mention it in that context is that, of course, my minister, after these decisions were made, gave an interview in Die Zeit, talking about this idea that this could be a Hamiltonian moment for Europe. And I think he's right. But I think one needs to talk about that very carefully. The idea that these enormous measures in themselves all of a sudden transform the nature of what we have at our disposition as a European fisc, of course, is not entirely accurate. But if this works well, and if it turns out that this is a success, and we all have to work very hard with it, they're huge sums now out there. They need to be spent well. It needs to be seen by all Europeans that this is actually working, that this is not money wasted, but it's really money that is moving Europe forward. If this works well, if things like the SURE program, it's a kind of a European unemployment reinsurance program, if they work well, of course, the chances are much, much better that then one decides, if one thinks about it modestly, well, in the next crisis of this nature, maybe we can do something similar. So it creates a precedent. But in principle, it could even go beyond it, because, of course, every time there's a crisis, to have to reinvent the institutional setups and to reach unanimity. I mean, reaching unanimity is really hard. Try imagine that in the European Parliament with 751 members.
It's not going to happen. So Jakob, you're saying,
in other words, there is an opportunity to move to a European Treasury. But let me be very concrete, because one of the decisions that were made at the European Summit when this initiative was launched by the Council, now it's still in negotiation, of course, with the European Parliament, but when it was launched by the Council, it also said explicitly, we need to reflect on how to refinance those expenditures. Which brings me to the subject of own resources. And a number of potential candidates are named in the summit document. And so if it were possible to finally, I mean, there has been decades of talk on this, but we didn't get very far, to use this opportunity, for example, to move forward on own resources, that in it by itself would already constitute a major step forward towards creating the European Treasury. So in that sense, it is a potential Hamiltonian moment. And I know my answer has been slightly long-winding, but I want to add one thing. Of course, it is also transformative to the extent that we've decided collectively in this crisis to issue debt collectively on a major scale. An order of magnitude more than was previously the case. So that also, I think, mustn't be underestimated.
So I think I share very much your view, but there is also the flip side of this potential very good thing. Could be the downside, could be if this money is seen to be wasted, if countries are seen not to be using it well, there could be in 5 years a backlash in northern countries saying never again. And so, as you said, it's very important these rules work and that these rules are in place. Do you think the Commission, the Council, the Parliament have the rules, have the tools to make sure that these money is invested in European priorities in the way you mentioned? Do we not have the risk that governments just stick this money in the budget, spend it, justified kind of the way they can, and go ahead without really any way for the European institutions to push the governments towards those European priorities?
That's something that's in the remit of national governments. And so I think clearly and squarely, the responsibility here is on member states to make the very best use of these funds that they possibly can. And I think it's a very important observation. It's an historic opportunity to move Europe forward. But if we don't live up to that opportunity, it can turn into the reverse. It could turn into a situation where people say, well, we've tried it and it fails, and we won't try it again anytime soon. So I think it's an important moment, and I think everybody involved is well advised to take that seriously. I'm seeing it, by the way, in my own department. I have the person in charge of drafting our recovery and resilience plan. So I hope we can live up to our responsibility on that.
Yes. So I mean, one thing that is going to happen as a consequence of this crisis is that we're going to see very, very large levels of debt. General government gross debt of the euro area is expected to average around 100% in 21, around 100% in 22. Budget balances are expected to be minus 4.9% in 21, probably worse because, as we know, the second wave is coming. You made a proposal at the start of the euro crisis for a blue bond. The idea was that until a certain threshold, the 60% threshold, the debt of the member states would be jointly and severely guaranteed. What do you think needs to change or to ensure this debt, the sustainability of the future debt that will come out of this crisis? Do we need to change fiscal framework? Do you think your blue bond proposal still has some validity? What would you like to see, looking a little bit beyond the immediate 2 or 3 years of the crisis?
Well, I think I want to come back to the observation that one important reason why fiscal policy has to do much more of the heavy lifting is precisely because interest rates are very low. And the good news is, because interest rates are very low, we can actually afford for fiscal policy to do more of the heavy lifting. Because of course, lower interest rates, given a sort of level of debt and given an average growth rate, make it easier to have debt sustainability. But that, of course, shouldn't lead to the conclusion that one can go out and spend it as if there were no tomorrow. That's not the message. But the message is, in a sense, we are lucky because the very reason that we need to do so much on the fiscal front is the reason, that is low interest rates, is the reason that we can do a little bit more on the fiscal front than we would be able to do otherwise. That's reassuring. It's not a coincidence, of course, but it's reassuring that this is the case. Nevertheless, we need to be careful. We need to be careful that we don't reach the limits of fiscal sustainability. But let me be also very clear on that front. Not doing what we can to address this crisis in terms of sustainability wouldn't help at all. It could potentially even make things worse. So we must do as much as needs to be done, but we should avoid doing more than needs to be done, not to end up in a very difficult situation afterwards. And I think that's the core observation. Now, the interesting question, you're absolutely right. We have a set of fiscal rules at the European level, and we have it for a reason, because in particular, if we have a common currency, there is what as economists we call a common pool problem. And it's not imaginary, it's real. So I think we have a collective interest that this common pool problem is and continues to be addressed, and that's why we have the rules in the first place. But the challenging question is, how can we operate with the rules that were made, of course, with a slightly different situation in mind, successfully in the current environment, making sure, as I said, and that's the objective, making sure that member states can do as much as they need to do, but don't end up doing much more. And so I think at this stage, I wouldn't focus so much on fundamental discussions. I would focus on the question, how can we address the current crisis? How can we use the current crisis for reasonable institutional developments, strengthening the idea of a European Treasury, and then let's be pragmatic about the next couple of years without losing sight of the, I think, very important reason why we have rules in the first place.
So let me just focus a little bit on those changes in the rules, the fiscal rules that we have. Niels Tiggesen, the chairman of the Fiscal European Fiscal Board and legendary specialist in the European economy, who you know well, thinks that the fiscal rules might need to be suspended until debt levels, GDP levels recover the pre-COVID levels. And he also proposes, the European Fiscal Board proposes some changes in the rules. The current system of rules is very complicated, and the Fiscal Board says, okay, just forget about all this complicated construction. Let's just have clear targets and objectives that have to do with expenditure-based rules. How much can the expenditure grow, and kind of have a much more simple framework. On the other hand, Blanchard and Cisco authors have proposed something else to ensure sustainability, which has to do with a little bit of a more sophisticated, qualitative, stochastic debt sustainability analysis. I won't bore the listeners with what that would involve, but it's an exercise that the IMF already does once a year for every country. What's your view on these two positions or others on what we should be doing after, let's say, June or something like that with our fiscal rules? Has this thinking...
I just had a wonderful video discussion with Olivier, whom I think you interviewed as one of your earlier interview partners.
I did.
With Olivier on his proposal. And in their paper, together with two co-authors, in his paper, he gives the wonderful image of the Sevilla Cathedral, which is a very, as you know, it's a very ancient cathedral built in a site where before there was a mosque, and then over the centuries it grew ever more complicated with I don't know how many annexes and chapels.
That's Cordoba, actually, but yes, absolutely.
But anyway, I think the point is it's a very complicated construction that grew over the centuries. And to some extent, of course, the European fiscal rules are a lot younger than that, but it is, as you said, it is a complicated construction which has evolved over time. And now, of course, one can always be tempted to say, well, let's completely tear down that complicated building, which has grown over a long period of time, and let's build a new church or a new set of rules. And of course, it's possible to do that, but I think one needs to be aware, just like with the cathedral, if one tears things down and tries to rebuild them, that's also not a costless exercise. I think one would have to be very confident that one ends up with a better building afterwards, because again, this is a consensus-driven process. So while I find it very important to think about these things all the time, I mean, rules are there to be reassessed, to be questioned. I think one also shouldn't lose sight of the achievement that one has, and that it may not be so easy to regain it if one something of similar quality if one were to tear it down. So I think it's important to bear that in mind. So I'm not at all against those reflections, but my sense is that at this stage, that's probably a bureaucratic or even political assessment rather than sort of purely based on textbook economics. We have more pressing priorities at this stage than to have a sort of very drawn-out discussions on the merit of fiscal rules in the first place.
I wanted to turn back to the macro scenario and one particular aspect of it. I think that the crisis it looked to us very much like a shock that would be more or less symmetric, that would affect everybody in the same way, but for different reasons, including potentially the quality of the government response, the quantity of the government support, the extent of the tourism sector, many other factors. The impact on different countries is very, very differentiated, and particularly the more tourism-dependent countries in Southern Europe are again going to be get hit back particularly badly, it seems. I think growth rates will be much lower. I think that we might see 10-point differentials in growth rates this year, maybe next year, between certain countries in the European Union. How concerned should we be about this divergence after so many years of convergence, and what you think consequences will it have for the governance of Europe? Could we see another financial crisis in 2 or 3 years as a result? Could we see again some severe strains on our union?
I think if it hadn't been for next generation EU, we would be, for the reasons you just pointed out, in very serious trouble. And of course, one does not know. I think one needs to be very careful. Just take the example of Eastern Europe, where in the first wave, they were quite lucky. They were not so much affected. Today, some Eastern European countries are among those with the highest incidence of infected. There's some countries where the first wave was terrible and the second wave is more subdued. There are other countries where it's the other way around, and who knows what the future will bring. So I agree with you. The impact is very different from country to country, from region to region. Some of these differences are sectoral. Certain sectors, they're less immune to virus-related problems, to social distancing than others. That's very clear. Some of it simply has to do with infection dynamics. Some of it, to some extent, may also have to do with differentiated government responses and so on. So it is a very complicated picture, and it's certainly not conducive in itself to convergence. That's very clear. And so I think even with hindsight, and I hope that the negotiation with Parliament can be concluded soon, I think one can say that's the very reason why it was the right decision. It was a momentous decision. It wasn't an easy decision. For many governments involved, it was a very hard decision, but why it was the right approach to address the crisis. So I agree with you, it's a huge challenge, but I would like to point to the fact that because of this very reason, we've also made this huge effort to produce a very substantial support package. In fact, there are several components. There's the next generation EU, but I would like to mention the shore. There's strengthening of the European Investment Bank. So a number of areas where we have made momentous decisions, and hopefully they will help us weather this crisis.
So one thing that was very prominent during your term, and that is also prominent now, and that could become sadly very prominent again, is the banking union, the stage, the build-up of the banking union. And it is clear that we made very, very massive steps ahead by having a single supervisor and by setting up a resolution fund that allows banks to be what is called resolved, which basically means a bit like a bankruptcy procedure without bankruptcy, allowing banks to continue their operations without being alive in some sense. And what was not done was deposit insurance, which was a very key step. And also the resolution was kind of not fully built. Now we are facing what could come become, who knows if the second wave is bad and if the economies suffer, we could face again banking problems. That happens in every economic crisis. You don't need to pronounce yourself on that. And the question is whether we have done enough, whether we can continue making steps towards banking union, and what can those steps be in a way that actually maybe, I don't know, it builds on the current institutional momentum, or maybe you say, look, it's not the time for these kind of steps. What's your view on this?
I think what is clear is that we now have a proper supervisory framework. We have a recovery and resolution framework, which of course also needs to grow. I think one problem is when you pass a law, that it doesn't come with a muscle. You only have powerful institutions when they use their powers. And so to some extent, by training themselves, by doing the things that they're meant to do, eventually they become stronger institutions. And especially in the area of recovery and resolution, this is still an ongoing process, and these institutions they need to grow. But I think that's quite promising. We have one obvious problem, which is the problem: what if there's something that is very expensive, a problem that is very expensive under the European watch? Since it's under the European watch, it would be difficult to simply tell member states, now you pick up the pieces, we have the European supervision, but when supervision does a mistake, it's the responsibility of any one member state. That would be difficult to justify. And so this question of how can we make sure that this sort of centralized bank rescue fund that is funded by banks' contribution, I think that's a good idea, of how it could be leveraged in event of a large crisis. That's something that was solved in principle with leveraging it via the ESM. But as you know, this dossier is a little bit stuck. I don't want to go into the details, but that would be obviously important. And then there's another very important question, which is the question of liquidity in resolution or recovery, but more how do you deal with the liquidity problem? And liquidity is multiples. These are enormous amounts that are required. And to some extent, of course, if the question of who does the recapitalization and will there be enough of it, once that is reliably solved, then it's easier to, for example, rely even more on the European Central Bank. But then it would have to be clearly a liquidity problem, solvency problem. Otherwise, that would be massively overstepping the bounds.
It does feel like
the bank is supposed to do. And so to me, these issues, they're very important. I think this crisis shows, I mean, that's one of the few reassuring things in this crisis, that the architecture that was designed in the aftermath of the crisis 10 years ago, which a little bit more than that, which was a financial crisis, at least for now, helps us a lot. If it hadn't been for this progress, I think the situation would be a little bit more shaky. So to some extent, it's a stress test. But if this were to go on and on and on, which I hope it won't, and I don't think it will, but if this were to go on and on and on, at some stage, we would also have to worry about the sort of financial stability problems that can arise in the aftermath or during a crisis like that. So, in other words, I think this question of recapitalization, the question of liquidity, and then yes, there are, as you know, ongoing discussions on the question of deposit insurance. But to me, this is one among a number of areas where progress needs to be made. But I think if one looks sort of at the core issues for the success of the banking union, probably there are other pieces that may still be a little bit more important than that. But that's not to belittle the importance of a functioning European system of deposit insurance.
So this balance between fiscal and monetary policy, and this is my last question, requires that the fiscal tools are used adequately. Some governments seem to be reluctant to use the fiscal support that comes from the ESM, from the loans part of the facility that was approved as part of the Next Generation EU in the summer. Is it important for the central banks to do their job that the fiscal tools be fully used and that governments actually be willing to take these loans as opposed to kind of issuing debt that will end up being purchased by the central bank?
I think it's very important that we have institutions like the ESM. I think it's a great achievement that it was created. It is useful that in this crisis there's a specific, as you know, basically a Corona window on offer at the ESM. I think that's a very good thing. But in the end, obviously, it's an offer. It's not an obligation. Nobody is obliged to be using it. Any national government considering it, they're absolutely, that's why it's there. They can use it, but they do not have to. And so I think we need to be very careful to make that distinction. And then I think people have to weigh the sort of advantages and disadvantages. I think one advantage of that Corona window, the COVID-19 window at the ESM, that is often overlooked, is that the cost of funding is really extraordinarily low. It is very attractive. And there may well be member states who are now borrowing at slightly higher rates than in the Corona window. And I think that's also something that needs to be borne in mind when making the decisions. But these are decisions that any member state will have to make for themselves.
Well, thanks very much. We covered a lot of European governance and policy making. I appreciate your time, Jakob, and good luck with running the response to this second wave, helping to run the response to the second wave in terms of the economic support for all those businesses and all these people who are seeing their livelihoods at risk from these decisions that governments have to take to respond to the pandemic. So thanks very much.
Well, thank you very much, Liz, for having me. It was a great pleasure and honor, and I hope to meet you in person soon when the situation gets better. All the very best.
Me too.